Good evening and welcome to the Nightly Market Intelligence Report. This is Jeff Killian broadcasting tonight, January 7th, 2013. The time is approximately 7:38 p.m. Today's action across the U.S. markets was one more day of light trading. We do not have any substantial volume to support the current move that has taken place between 12/31 and 1/2/2013. The last three trading days here have been basically moving sideways. What has happened is that because of the cross and 3 days trading above the level at 13,350, we have a new trading range that has been established between that level and up here, as outlined by these prices broadcasted out into the future, at 13,553. But without substantial volume here coming in to support the most recent up move on what we believe is inflated price movement, because it was an event-driven, a fundamentally event-driven news report that was broadcasted out about the fiscal cliff, that these prices are trading on a lot of weakness right now. The most prominent level to the downside, again, that could act as support is if prices get sustained at this level, will be 13,350. The next level to the downside is outlined by 1220, and here at 1221 is 13,312. Now, where the probe is hit this level today at 13,350, it appears that that could be tomorrow's action and a possible close at that level. So let's take a look at some of the indicators as we do every night, and let's see what the realities are behind the indicators as compared to the most recent three trading sessions moving sideways here. What we do have, and we talked about last night, is the crossing from below to above. Very uncertain market conditions right now. The indicator levels themselves are rising back up to a recent peak here that was outlined. This level has been broadcasted out, and this level here. So we're getting to the upper region of the MAC, the indicator again. Here, if we take a look at the Chaikin money flow, since the trend line crossed to the downside, if we take this and eliminate this for just a second here, and let's fly in, because of the action today, what is new is we do have an official negative divergence as compared to the price movements. We're going to make the relative comparison of the slope of this line as compared to the slope of this line. Now, this is a learned technique to find, track, and trade the real smart money, the people who are moving the prices behind the Iron Curtain here, that we use every day to analyze the reality of the, in this case, lack of volume behind this price chart pattern, signaling the inherent weakness within it. We believe that at this time that this price sell-off here was destined to go much, much lower. This was evident. As a matter of fact, we called it on a report, as you all know, and went ahead and predicted even a larger move to the downside. Now, since the money flow has come back up, the lack of this level reaching here again, and then today's downturn has an official negative divergence as compared to these 3 days that are moving sideways, again, signaling inherent weakness within the U.S. markets. If we take a look at the money flow index, a 14-period, the shorter term money flow indicator that we use here to find, track, and trade the smart money, it's very clear. Nothing's changed. Completely bottomed out here at this level, a little upward movement. But as compared to the price movement, this is markedly different, indicating a lot of weakness within the market. Now, last night we indicated that we are overall long, but this is only a level 6. I mean, this can turn very quickly to market net neutral, and it appears that tomorrow's action might even get us there. So we're approaching this with a lot of caution, traders and investors, and this is what we're broadcasting out tonight. We take a look at the EMAs. The only reason why these crossed from below to above are 4- and 8-period exponential moving averages is because they hit these market turning points running, and that's what they're supposed to do. But in this case, although the disparity is a little wide here, we have some flattening out at this point. Now, we talked about a lot of the levels along the way and how as prices get back to previous levels, of which has now become resistance, previous price levels that have been broadcasted out into the future. Okay, our indicators, like the stochastics momentum index, is right about there, just about there at an exhaustion period, entering the overbought territory as outlined by the horizontal line here at the 80 level. So overall, if we just took what we have extracted from actionable intelligence, out of the Dow, it appears that we have a lot of weakness right here at this time. I'm thinking that if tomorrow's action is sideways again and we have a very small up close, not higher than today's range, then we're going to go to market net neutral and wait for these prices to come to us. So let's get out of this, and before we proceed, I have to make an announcement tonight. We do not have an update on the ETFs, and the reason why is because the symbology has changed, and we are going through all the data, even until late tonight, to confirm the prices and that everything has been transferred over properly until we have this data correct, which will probably about 11 o'clock tonight. We can't broadcast it out because we know that it needs to be correct. What we do have, and what we can tell you, is that we have not closed out any positions. So everything that was open and long for last night remains exactly the same. No new positions, long, short, nothing sold out of, nothing bought into. So this is exactly where we stand. And we will have these prices for you again tomorrow night on the next report. Let's get out of this and get right into the continuous contracts and take a look at what futures has to say for us. The levels, although different numerically, are similar. What has happened here is that this level has been crossed on futures and the current trading channel on the S&P 500 E-minis, analyzing the current continuous contracts in real time at 1455.75 on a daily chart. Right here above this level is broadcasted out right here at 1457.25. Now let's remember that level because that is a significant level to trade to and from. Above it, the recent ceiling that will act as superior resistance at this time that was laid out by 915 and again 918 still stands at 1457.25. So we have a very thin trading range here. It's going to be very interesting to see if and when prices hit this level, what will happen. Most of the time, futures are leading equities prices. We're going to look at this very hard and analyze this very carefully, because if this becomes what we believe it can, based on the fact that we don't have any smart money volume coming in across the equities and here on the futures as well, this could be the ceiling that futures will find, possible blow off above it like here, and prices will turn back around again to absorb the most recent price action to the upside, this incredible gap, and possibly over a longer term time period actually be filled. We say this because we do not have any substantial volume to act as the catalyst to keep pushing the prices up in the U.S. market. If that changes, as soon as it does, our bias, our position on the market will change with it. But until that happens, nothing changes on this end. Here, if we take a look at the Chaikin Advanced Decline Oscillator, we have a different story on this versus the equity side. A substantial negative divergence, more contracts declining versus advancing. It is very clear here. The strength of this level as compared to here is of a lower nature. Here, if we take a look again, stochastics reaching one more time, very close to the overbought zone at the 80 level, where it very well might find resistance. Let's take a look at the Fibonacci layout here. Here's where we initiated. Here's our secondary connect point. It's more than a coincidence that the price is gapped away and a low hit exactly at 76.4, and they're trading up. The 100% retracement will be where the market has laid out the superior resistance level, as you saw in red, that we just showed you a few minutes ago. Here, if we take a look at the MACD, again, traded up on the inflated price move, Again, far away from this level, but starting to change. Here on a Chaikin money flow indicator, this is something markedly different. This is something that I want everybody to take a good look at, because the money flow indicators track the lack of volume in this case, and it is clearly showing us that there's substantial weakness in this price chart pattern at this time. What else will we look for in this case? To preempt tomorrow night's presentation, we'll be looking to see what happens with this pattern. Prices trade out of it to the upside or the downside. Right now, the bias is to the downside. So at this time, trading at 1455.75 real-time mark to the market on the continuous contracts, the S&P 500 futures market. We had an open at a higher level and a now close for the session right here with a tail down, indicating the weakness in the chart pattern, again, as originally identified by the indicator. So let's get right into real time. You know, last night on the report, we had laid out levels on the 1-minute chart, and we had talked about the bias being to the downside. And we had talked about if prices trade down because that bias sticks in the overnight session, then these would be the levels that prices should get to on the way down. Now, yesterday, when we finished broadcasting the report, more or less we were at about 640, let's say, in the neighborhood of this area right here. This is exactly what we had on the charts. And I posted last night's NMIR to YouTube because I want people to see, I want the world to see that by using the smart money trading methodology, by following this methodology, one can way outperform the markets. And as an E-mini futures trader, well, I don't know if I need to say any more. The opportunities are so far greater than forex, so far greater than I believe any other market, and this is why this is my primary market to trade. So let's get right into it here. The levels that I had laid out on the report were 1457.75. And that was because of the alienation of previous prices here broadcasted out into the future. We talked about how this probe traded through it and how these other probes and this open right here hit at exactly this level. Now, this is no coincidence. So this acts as the level to execute the trade on a downside if we have the correct setup on the 15-minute charts and some volume behind the move. The first level to the downside based on the incremental levels on the 1-minute chart were 1456.50. 1455.75, and our price profit target 1 and 2 were 1455 and 1454 even, as outlined by these prices and these prices here. We also had a lower level, okay, but for the most part we're looking at really at, you know, this level right here is really where we needed to be at a minimum, if not here. So let's take a look at what happened. We finished the report here, and if we take a look at some of the 15-minute indicators first, okay, the prices, the levels that I had laid out here, okay, primary price profit target number 1 is 1455, and here's 1454. We took these levels right here as laid out by the 15-minute charts, and that's what you just saw on the 1-minute chart. The distance between here and here is good enough for a trade. Let's take a look at a few other things. Here we have a substantial negative divergence on the money flow index for the setup for the trade. Now, how did that happen if we have a blow-off here? In this case, what we teach here is to eliminate the blow-off and go with the level that is established by the most recent prices that separates it from the majority of the chart pattern, and that is basically this level right here, the bottom area of this frame. So this data point on the indicator as compared to this price point, as compared to here and here, lays out what at first glance is a negative divergence, but at second glance is an divergence. It is running in tandem with the weakness of the prices. Here's the level that was laid out that you saw, at 1457.75 one more time. So let's look at the relative comparison of the indicator as compared to the prices. Here's where we know where we got to get in, and here we are taking a look at this level again. The EMA down cross confirms a short bias. This was on last night's report. Here's the level to be in. The EMAs had already crossed and had never looked back before the trade was ever taken, because here they crossed, and again, all the way at this point for the entry, clear signal to be short. MACD indicator crossed here and never looked back before the trade was taken. And this is really why we use the 15-minute charts, because they dominate the 1-minute charts where we look to make the precision entries and exit. The cross came in here from stochastics, as you saw in last night's report, and again here, a little up move and back down again, never looked back. Here, substantial difference here, cutting out. We have a real negative divergence as compared to the prices, not an divergence, signaling a lot of weakness within this price chart pattern. The sell-off is imminent, and that's how we knew. We had suspicions about the large dump and the check and money flow here, but it was confirmed by the negative divergence and then the down move on the momentum of this indicator before the move ever sold off. This is before the move ever sold off. There's your price chart pattern being traded out of. When we look at this and we qualify this, we analyze this, and we act on this in a sequential order, this is the way to trade, where no two chart patterns are ever the same, no two indicator formations are ever the same. They must have certain commonalities that make them true high probability trades to be acted on or not. Okay, so let's get back to the 1-minute chart here. Here's the levels that were on the 15-minute chart broadcasted out into the 1-minute chart at 14.55, price profit target 1. Here is number 2, a lower level here. And we move into the future after last night's report ends. And we have a break here. Prices start to trade down. Let's open this up a little bit. A lot of sideways movement. A test of 1457.75 in red. And then what happens? All of a sudden right here, the close below at 10 p.m. at 1457.50, a quarter of a point below on the close right here of the level that was established. There's the end. Let's take a look at how the trade played itself out. The incremental level was hit. Price gap up, no problem. We have a stop that's above here at a point and a quarter away. It's no problem for us. Prices keep trading down to the second incremental level and right here to price profit target. What? Price profit target number 1. Now, on the last trade, on the last short that we had, we waited for the trend line to get violated to the upside and then got out of the trade. In this case, we weren't waiting. We weren't going to hang around, going to lock in a profit, because we know at that time, more than likely, because of some volume that had come in right here, at this new base level, at the price profit target that we had laid out, that this was probably going to be it, and we weren't going to hang around and give any money back. And that's exactly what we did. And this is where we got out right here at the open, at 14.55 at 12:37 a.m. Eastern Standard Time today, 1/7/2013. Let's back it up and look at the stats. The trade for 1/7/2013 in the overnight position. Gain on the trade was 2.5 points minus the spread, left us with a net gain of 2. In at 14.57.50 at 10 p.m. Eastern on 1/6, out on the new clock at 14.55 at 12:37 a.m. on 1/7. 2-point gain times $50 is $100 net gain per contract times 30 contracts traded brought in $3,000 net dollar gain on the trade for one more excellent setup that turned into a real profitable trade, and you saw it. Last night's report was the setup for all the levels and the price profit targets, and that's exactly what was traded. My pleasure to present to all of you tonight. We'll make sure that we have triple confirm the ETF data for tomorrow, and we'll present that in its entirety. We'll see you again on the next Nightly Market Intelligence Report. Good night.